Let's get our viewer queries answered now. And Harsh, let's pick up our viewer question. I think we're talking about Karthika Krishnan's query. And Karthika says that she is 32 years old and she has an investment portfolio which has Parag Parikh ELSS. She's also doing an SIP in Quant FlexiCap. She has SBI large and mid cap, SBI multi cap, SBI savings fund. That's particularly her emergency fund kitty. And investment horizon is almost 18 years, and she expects to collect almost 3 CR from this particular portfolio. We don't have her on the phone line, otherwise, we could have taken a lot more details. But then, as far as fund mix is concerned, um, any more diversification needed or better quality funds?
So, well, Kavita, with regards to her portfolio and her goal, okay, so let's just address the goal part first. She's putting 40,000 every month, and if we assume a 12% CAGR, and with a step up, of course, I mean, she's comfortably to her way of accumulating 3 crores, which is her target. Now, with regards to her portfolio, yes, you rightly pointed out, just purely from the sake of diversification, fund house diversification. So she has two schemes of SBI, the SBI large and mid cap and SBI multi cap. So purely from the sake of fund house diversification, she can stop her investments in SBI multi-cap and pick the Nippon India multi-cap. So that's purely from the diversification point of view. Not that SBI multi-cap is not a good scheme, just that she already has one scheme. So giving her another scheme from another fund house from the aspect of fund house diversification.
So she can continue in SBI large and mid cap, and she can continue accumulating the emergency fund in SBI savings fund. Is that right?
That's correct. Just a multi-cap, I've given another scheme for fund
Okay.
manager diversification.
She really needs a multi cap. She already has a flexi cap and then a separate large and mid cap in the portfolio.
No, so that's fine. So flexi caps, essentially Kavita would be a large cap biased product. I mean, as of now, the even a flexi
Parag
cap will
Parikh.
have
Yeah.
mainly,
It's
yeah, mainly large cap allocation. So multi cap gives you the little bit of a small cap exposure also.
all right. Let's move on and let's take Sudarshan's question. And he says that he's 40 years old and he wants to create a corpus for his child education. Investment horizon is 12 plus years, and he's planning to invest 40,000 per month. And he's also interested in having a portfolio which has international exposure, and also invested across all asset classes and market caps. Harsh.
Yeah, so Kavita, the good part is that looking to invest for child's education well in advance, you have 12 years to your side, great. I mean, the investments, the philosophy and the thought behind is fine, good again, that he wants to have in all different market capitalization and across different assets, so and international exposure. So, well, I'll give him three schemes, which will possibly serve all the purposes. So, you have a Parag Parikh Flexi Cap in which you can put 10,000, the Motilal Oswal Nifty Mid Cap 150 Index Fund, 10,000 in that, and a White Oak Multi Asset Fund in which he puts 20,000 rupees. So, with these three schemes, he will have exposure across all market segments. He will have international exposure by the way of a small holding that Parag Parikh FlexiCap has. And you will also have exposure to real estate, commodities, debt, etc. in your multi-asset fund. So he'll possibly get all of this in just three funds that I'm recommending.
Is the investment amount enough?
So, well, how much could be enough I mean, he wants to start with 40,000 surplus right now. So, I think the good part is start as much as you can and possibly start increasing the investment as much as you can, because the child is, young right now. You don't really know what career he'll pursue. But if you can accumulate a decent amount of money, that will help him either ways, whichever particular profession or.
Okay. All right. So I think there's some technical issue happening, but then let's move on to our other viewer queries, and we are taking up Varun's question, and he says that. Okay, so he's got Nifty Midcap 150 Quality 50 and he's got Nifty Midcap 150 Momentum, and which is more suitable for long-term perspective, and what should be the percentage of exposure in these two type of funds, can you also look at more index funds in his portfolio? Okay, Harsh. Nifty Midcap 150 Quality 50 and Nifty Midcap 150 Momentum 50 Index. Could you please start with explaining the difference between these two type of funds? Harsh?
Smart beta funds, there are two factors which are being considered right now. One is the quality and one is momentum. Okay, so the quality 50, basically the factors that will be used will be the, to determine which companies form a part of this portfolio will be the return on equity, will be the debt the company has, and the EPS of the company. So the selection criteria to pick the 50 companies will be based on quality factors, which I've just said, which is return on equity, debt, and EPS. Now, if you look at a momentum strategy, the factors which are taken into consideration while fixing the stocks, while selecting the stocks in that basket of 150 mid cap stocks, will be the 6 to 12 months price returns. It will be adjusted to volatility. So the essentially is going to be the price return adjusted to volatility. So my suggestion would be to look at the quality 50 portfolio because that is the right way to go about it for a long-term investing point of view. He wanted a scheme recommendation, so UTI Nifty 50, Nifty Mid Cap 150, Quality 50 fund will be a better one for him.
All right, Harsh, we'll also try to connect you over the phone line because I think there is some problem in your feed out there. But let's take Rajendra's question. He's doing an SIP of 34,000 per month. The funds in his portfolio are HDFC Large and Mid Cap, Motilal Oswal Mid Cap, Nippon India Small Cap, UTI Nifty 50 Index, Quant Mid Cap, Parag Parikh Flexi Cap. He's got HDFC Flexi Cap, HDFC BAF, and ICICI Pru Multi Asset and Mira Asset Large and Mid Cap. Um, Clearly a case of over diversification, but then he also has some financial goals lined up. A retirement corpus 70 lakhs after 13 years. He needs to buy a house. After 13 years, the cost should be 30 lakhs, or the amount that he is planning to accumulate from this portfolio for this particular goal is 30 lakhs. Child education 50 lakhs after 20 years. I have no idea if he's factored in inflation for all of these financial goals and if especially the retirement corpus would be enough. But having said that, Harsh, if you can hear me, let's help him align the goals in the right way first.
Yeah, so with respect to goals, I mean, Kavita, I mean, it's pretty apparent that he would not have accounted for inflation. So I think that is pretty clear on that part. Nevertheless, what he's doing right now, uh, in a fairly decent manner, he should be able to achieve his targets, at least what he has spelled out right now. Coming to his portfolio, for an investment of 34,000, he does not clearly need 10 schemes. The investment can easily be managed with just 5 schemes, and I'm picking the schemes out of his existing portfolio. So UTI Nifty 50 Index Fund 7,000, HDFC Large and Mid Cap another 7,000, Quant Mid Cap 7,000, HDFC BAF 6,000, and ICICI Multi Asset Fund 7,000. I think his 34,000 rupees invested in just these 5 schemes should do the bit for him. He does not need 10 schemes in his portfolio.
All right. Okay, so it's important for you to align your goals in the right way, and the kind of funds that you're recommended to invest now are in UTI Nifty 50 Index, HDFC Large and Mid Cap, Quant Mid Cap, HDFC BAF, and ICICI Multi Asset. That's the recommendation coming on from Harsh. Harsh, thank you so much for being on the show today and helping our viewers with their financial portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID where you can send across your questions. And do give us a detailed query so that if you want the right kind of strategy for any of your financial goals, our expert can help you exactly with that. Thank you so much for watching. Goodbye.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.